Hey, it's Mike at Cross Country Mortgage. Good morning. It's time for your Monday morning mortgage update for the week of July the 28th. Hope you all had a fantastic weekend. So let's talk about what happened last week, what's going to happen this week. I always try to give you some insight, tools, tips, tactics, things that you can use, information that you can take when you go out there and buying and selling a house or helping your clients buy and sell a house. So what happened last week? Well, last week was a pretty flat week. No change to rates. There wasn't a lot of economic news out there. And we've really seen that for the last 2 weeks. In fact, if we look at the charts on really what's been happening with mortgage rates, you can see on the right side here, this is a 6-month average of the trading of mortgage-backed securities in the bond market. On the right side, we see really some red and green candlesticks, but overall, no change. We're down a little bit today. And this is all going to change this week. Big week of economic data that's going to potentially and most likely move the markets. Now, the question is it going to move rates up or is it going to move rates lower? So what are we looking at this week? The Federal Reserve's having their July meeting this week. They'll start Tuesday and end Wednesday. Tariffs, big news about tariffs that came out over the weekend that potentially could happen this week. Inflation, and then jobs week. Normally, we see jobs week occupy the news, but now it's actually fourth down on the list. So let's talk about the Federal Reserve. The Federal Reserve is meeting their July meeting. We know they meet about every month and a half to talk about economic policy. They're not going to talk about economic projections and what's going to happen with the economy. The real question here is there going to be total agreement with all the Fed members, or is there going to be dissent? Is there going to be disagreement? We have some governors that are saying, hey, cut rates. We have Jerome Powell that are saying not cut rates. We know there's been this drama between Trump and Powell over the last month and longer. It's just drama. It doesn't drive economic policy, but it's occupied a lot of the headlines. And we know Trump wants Jerome Powell out. He can't just get rid of him. Is Jerome Powell going to resign? And Jerome Powell was appointed by Trump when Trump was in office last time. So again, all this drama doesn't really affect the policy of the Fed. But what is the Fed going to come out and say? Should they cut rates? A lot of people, a lot of economists, non-political insights said, yeah, they need to cut rates. Their inflationary number is set too high, their benchmark number that they want to hit. So what's going to happen in this meeting? Starts Tuesday, ends Wednesday. Jerome Powell has a press conference Wednesday afternoon, and what's the message going to be? And that absolutely could drive rates this week. Second thing is tariffs. So yeah, this has been in the news, obviously, since Trump's been in office. Threatening tariffs, pausing tariffs, threatening tariffs, pausing tariffs, putting 10% tariffs on all countries across the board. And absolutely, Trump and the administration wants agreement. So we have an agreement with Japan. We have an agreement with Britain, and that's great. Japan's 15%, Britain's 10% because they got on board early. And over the weekend, the European Union now has an agreement with the U.S. This is all positive news because it brings certainty. We know what's happening in the future. And bond traders, which really is what we always talk about because mortgage-backed securities are traded in the bond market. Bond traders like certainty. They like to know what's going to happen tomorrow, next month, in 6 months. And they trade all of our 401ks and our stocks and day traders and everybody that trades. When they put money in that bond market, they're putting it in there for certainty. Maybe a lower return, but that's certainty. And the more money that flows into that bond market, the better it is for mortgage rates. So we have the European Union at 15%. And the next big country to come to some agreement is India. So are these agreements that have been put into place going to really promote or motivate India to come to an agreement? And then we got Canada and Mexico. You know, we have this NAFTA agreement, but anything outside of that agreement, tariffs need to be agreed on. So we'll be looking at this week to maybe we'll see some more agreements from these other countries, these other major players that occupy the news. The third thing is inflation. The PCE, the Fed key measure of inflation that the Fed uses to set policy, comes out Thursday after the meeting. We expect this to go up, meaning higher inflation. Higher inflation diminishes returns to the bond market, and that's bad for mortgage rates. So if we hit expectations, that's going to be positive. If we go above expectations and this inflation comes in higher on PCE, the PCE report Thursday. That's bad for rates. So we'll absolutely be watching this inflationary report coming out Thursday. And then the last thing is jobs. The first week of every month is jobs week. We get a ton of jobs data. How many jobs are added? How many jobs are taken away? Unemployment and wage numbers. If wages go up, if wages go down. So anything that's positive to the economy, meaning more jobs, higher wages, lower inflation, that's bad for mortgage rates. Anything that's negative to the economy is going to be good for mortgage rates. So this is a real pivotal week because it's going to set the stage for what's going to happen really for the rest of the year as far as the mindset on what's happening with the Federal Reserve and economic policy. One other thing that I forgot to mention is on tariffs. So we've been collecting tariffs obviously for a while, and this really isn't mentioned that much, but the Treasury Department is flush with money because of all the money coming in from the tariffs. And the tariffs haven't been passed down to the consumer yet. So we're not seeing inflationary news because of the tariffs. We're seeing inflation because we just have had inflation for years, for 2 or 3, 4 years now. But now are we going to start to see this tariffs actually translate down and trickle down to the consumer, which we haven't seen yet. But again, all this tariffs is bringing in money to the Treasury Department, and Treasury pays the bills. And you really don't hear this in the news that much. So this tariffs is starting to actually bring some good news. We just need to see if there's an effect from it. So what are we doing this week? We are floating this week with real quick tab on the trigger to lock, but we are hoping that and expecting that maybe we'll get some good news on rates. I hope you have a great productive week. If you know somebody can benefit from this video, please forward it to them, and we'll talk to you next week. Bye-bye.